You've been renting out a rental property and you've never declared the rental income, whether it's a UK property, a holiday let, a lodger, or even a home abroad. HMRC's 2025 crackdown means it's time to get things in order. And don't worry, you are not alone. A lot of landlords didn't realize they needed to register. Some assumed the letting agent handled everything. Others thought, well, no profit, so no need for a tax return. And others simply didn't know. In this video, I'll walk you through what the Let Property campaign actually is, why HMRC are sending more letters in 2025, what records you need, the steps you must take before disclosing, common mistakes I see landlords make, and when to get help. This is especially important if HMRC haven't contacted you yet. Why? Because voluntary disclosure gives you access to lower penalties. Now let's get started. Hello, welcome to today's video. My name is Dora and I'm a Chartered Certified Accountant and fellow tax advisor here at Grace Certified Accountants. Now before we continue, can I remind you to please subscribe to our channel for more property tax tips and advice. And if you know of other people that you think will find this information useful, please share with them. Thank you so much. Now let's dive in. So, why is HMRC making a crackdown? HMRC's 2024-25 annual report makes it clear. Rental income is a priority area and they are increasing compliance activity to reduce the tax gap. They now receive data from letting agents, Airbnb and similar platforms, councils and licensing registers, deposit protection schemes, land registry, overseas banks for foreign rental income, and even utility companies in some cases. HMRC run this data through their matching system. If you own property, but rental income isn't on your tax return, the case is flagged. That's why more landlords are receiving nudge letters, discovery assessments, penalty notices, and follow-up checks. And once HMRC contacts you, the disclosure is no longer voluntary. That means higher penalties and more scrutiny. This is why acting early matters. So, what is the Let Property campaign? The Let Property campaign is HMRC's disclosure route for landlords who haven't declared their rental income. It applies to UK rental property, foreign rental income, lodgers, holiday lets, inherited property that you now rent, and multiple properties. It lets you come forward, correct past years, and reduce penalties, as long as the disclosure is voluntary. If HMRC contacts you first, they may still direct you to use the LPC portal, but it will be treated as a prompted disclosure with higher penalties. So, what must you do before disclosing? Before you go anywhere near HMRC, you need to gather full records for each year, work out allowable versus disallowed expenses, calculate the correct rental profit, include periods when the property was empty, calculate interest, work out the penalties, and prepare a clear explanation. You need bank statements, tenancy agreements, mortgage interest statements, repairs and maintenance invoices, service charge statements, letting agent statements, and evidence for overseas properties if relevant. If records are missing, you must review the figures carefully. And remember, HMRC can go back up to 6 years for careless errors, up to 20 years for deliberate behavior. This is why it's important to get the calculations right. Now, if you have stayed with me till now and you are finding this information useful, I'm glad. Now, can I remind you to please subscribe to our channel for more property tax tips and advice. And if you know of other people that you think will find this information useful as well, please share with them. Thank you so much. Now let's continue. So, how does the LPC process work? Here is how the Late Property Campaign works. Step 1. Notify HMRC. Fill in a short form to tell HMRC you want to make a disclosure. You will receive a disclosure reference number. Step 2. Prepare your figures. You put together all the profit calculations, interest, penalties, explanation, and supporting documents. Step 3. Submit the disclosure. You upload everything and pay the amount owed. Step 4. HMRC will review. They may accept it, or ask for clarification, or open an inquiry if the numbers don't match their own data. This is where a lot of problems happen if the calculations aren't clear. Now let's look at the common mistakes. Here are the mistakes I see often. Assuming there was no profit, so nothing to declare. Thinking the letting agent handled everything. Claiming capital improvements as repairs. Not reporting foreign rental income. Guessing figures instead of calculating them. Mixing personal and property spending. Believing you cannot use the LPC once HMRC contacts you. Not keeping receipts. Applying the rules for the wrong tax year. Many of these lead to higher penalties or a longer HMRC review. Now let's look at when to get help. You should consider support if you have more than one property, you have overseas rental income, records are incomplete, you're not sure what you can claim, you've already received a letter, you need the disclosure prepared clearly and defensively. A structured review helps you understand how many years are affected, what HMRC expects, and how to put everything right without making the situation worse. The Late Property Campaign is one of the safest ways to correct years of undeclared rental income. But it must be handled properly, especially now that HMRC are increasing checks in the rental sector. If you need help reviewing your situation or unsure where to start, you can reach out using the link below. Make sure you also read the full blog that goes with this video. It has examples and a simple list of everything you need. I'm Dora from Great Certified Accountants. Please remember to like, share, and subscribe to our channel for more property tax tips and advice. Thank you so much for watching. I'll see you again soon.